99% of people fail to build real passive income because they are working too hard. They waste hours tracking individual stock charts, reading boring company balance sheets, and listening to smooth-talking financial gurus who make everything sound complicated just to steal their money in hidden management fees. Stop doing that. The wealthiest market architects don't work hard. They build a system that works for them while they sleep. If you want a machine that forces the global stock market to deposit a reliable $2,000 every single month straight into your account, you need to execute what is known as the lazy portfolio matrix. You don't need 20 different stocks. You don't need to check your phone every 5 minutes. You only need exactly 2 specific index funds that hold the dominant monopolies of the world. Let's look at the absolute naked math of how this matrix generates thousands of dollars without you lifting a finger. Let's get real about the numbers. To extract $2,000 a month, you need $24,000 a year in automated cash flow. If your core machine operates on an optimized combined yield of 5%, your ultimate goal is to compound your total capital base to roughly $480,000. It sounds massive, but when you stop picking losing stocks and let the top 500 global corporations compound your money for you, this milestone hits years ahead of schedule. Your first lazy bucket is IVV, the iShares S&P 500 ETF. When you buy this single asset, you instantly own a slice of the 500 largest, most aggressive companies in the United States. We are talking about tech, healthcare, and energy giants like Apple, Microsoft, Nvidia, and Amazon. The S&P 500 has a built-in, brutal self-cleaning mechanism. If a massive company gets lazy, loses money, and drops out of the top 500, the index automatically kicks them out of your basket and replaces them with a fresh, surging company. You do zero work, yet you constantly own the winners of global capitalism. But growth alone won't pay your monthly bills. We need to pair this with a high-yield cash flow monster. To turn this massive capital growth into instant monthly liquidity, we layer in your second basket, VAS, the Vanguard Australian Shares ETF. While the US market gives you aggressive technology compounding, VAS locks down the heavy, cash-rich monopolies of the Australian economy. It tracks the top 300 companies on the ASX. Think about the massive banking networks like CB and Westpac, or the global mining empires like BHP. These companies don't spend billions on speculative tech research. They generate pure, raw free cash flow and distribute it straight to their shareholders. The secret weapon here is the franking credit system. Because these local giants have already paid their 30% corporate tax, the tax department attaches a credit to your payouts. Inside a low-tax structure like your superannuation, these franking credits can turn into an absolute cash refund check at the end of the financial year. By deploying a structural split 60% into IVV for absolute global dominance and 40% into VAS for heavy franked local yield, your portfolio becomes completely unkillable. The absolute final law to keep this lazy machine running at peak velocity is to never look at it. The biggest enemy to $1 million portfolio is your own emotion. Every time the market has a minor correction, retail investors panic and sell their shares, locking in permanent losses. True wealth builders automate their system. Set your account to automatically buy more shares of these 2 funds every single time you get paid, turn on the dividend reinvestment plan, and let the mathematical matrix run on autopilot. Review the systemic risk disclosure on your screen right now and in the description box below before moving any active capital. If you are ready to stop working for money and want a system that builds a true $2,000 a month passive income wall, smash that subscribe button right now. Stay disciplined, trust the math, and keep your hands off the portfolio.